It's really quite shocking, isn't it, how a personal tragedy, something seemingly straightforward, can just explode.
Yeah, and turn into this huge issue of public governance.
That's exactly what we saw in Beijing back in September 2025, the death of actor and singer Yu Menglong.
It really is a critical case study. For those of us looking at, well, how information and capital move here, it shifted almost instantly
From just a sad celebrity story.
to something much deeper. We're really digging into China's information economy here, how official narratives get managed, and crucially, that point where public trust stops being just a social idea.
And becomes what? An economic factor.
Exactly, an explicit economic variable in how digital governance actually works.
Okay. And just before we dive in properly, we're China Explained. We're based here in China, and we do our own independent research and analysis for these scripts.
That's right. And the podcast format itself, well, that's generated using AI, helps make our work more engaging, more accessible.
But, and this is important, every single deep dive is reviewed, edited, fact-checked by our human team. Accuracy and credibility are paramount.
Definitely. So let's set the scene, the official story. Yu Menglong, 37 years old.
Known for being professional, projecting this kind of calm, successful urban image, he really represented an aspirational figure for many, a middle-class success story.
And he had international ambitions, too. You might remember he joined CAA Creative Artists Agency back in 2018.
A major global talent agency. He wanted to move into directing, right?
That was the plan, which, of course, made the news of his sudden death in September 2025 even more jarring for people. He seemed so focused on the future.
So what was the official cause of death?
Officially, an accidental fall in Beijing, apparently after drinking.
Okay, and the confirmation.
This is where it gets complicated, fast. The first word came from his studio. But here's the thing, the studio was deregistered.
Deregistered, meaning it didn't legally exist anymore.
Correct. That statement cited the police, saying no criminal involvement. Then, a few days later, the official police report came out.
Confirming the accidental death.
Yes. Confirmed the accident, ruled out foul play. Case closed. Officially, anyway.
But you're saying that closure was actually the beginning of something else.
For the public, absolutely. That's when the real skepticism kicked in. The official version was met with, well, immediate resistance. And that turned this specific incident into a much broader crisis of trust.
A breakdown in institutional faith, you called it?
We really need a framework to understand this. The public reaction wasn't just random noise. It highlighted four, let's say, critical fault lines.
Fault lines.
Yeah, points of weakness or tension. They didn't just raise questions about his death. They exposed underlying issues in the whole digital governance structure. And these, interestingly, acted like early warnings for potential economic impacts down the line.
Okay, let's break those down. Fault line 1, doubts about that initial studio statement.
Right. The credibility gap was there from minute one. How can you have an official statement from a company that, legally speaking, doesn't exist?
So it wasn't just a technicality like expired paperwork.
Not really. It creates this massive cloud of confusion around accountability. If the entity speaking isn't legally real, then who is speaking?
Is it the family? Is it some PR firm using the old name? Someone else entirely?
Exactly. You don't know who's behind it.
Okay.
That lack of clarity right at the very start sowed distrust because the basic mechanism for accountability seemed, well, absent.
And that initial confusion then feeds into the second fault line, the police investigation.
Perfectly. The second dimension was the transparency gap around the police investigation's timeline.
You mentioned the official police bulletin only came out days later.
Days after the news was already viral. Days after speculation was running wild online.
That delay is everything in the digital age, isn't it?
It's critical. When you're dealing with high-profile events, digital governance has to be almost immediate. That gap.
Yeah.
It created an information vacuum.
And online, vacuums get filled. Fast.
Instantly. With theories, rumors, speculation. People weren't just asking what happened. They started asking why the silence. What needed managing during those days?
It highlights how timing and, I guess, the tone of communication are just as important as the facts. Delay feels like hiding something, even if it's not intended that way.
Precisely. Even if the police report that eventually came out was 100% accurate and detailed, it was already fighting an uphill battle.
Because people had already invested in other stories.
Exactly. The narrative ground had shifted. Which leads us neatly to the third fault line, this paradox of trying to control rumors, the Streisand effect.
Ah, yes, where trying to suppress something just makes people more interested.
Absolutely. As the questions grew louder online, there were attempts at what you might call information cleansing.
Meaning posts were taken down, hashtags limited?
Yes, standard procedure maybe, intended to stop misinformation, but the act of suppression became the story itself.
People thought if there's nothing to hide, why delete the questions?
Right. It amplified curiosity instead of dampening it.
Mm.
And for many citizens, sharing those rumors, seeking them out, it became a substitute for official answers.
Like a form of participation.
In a way, yes. A participation in demanding fairness, demanding transparency, even if the information being shared wasn't verified. It signals that faith in the system to provide truth is eroding.
And that leads to the fourth dimension, the online reaction solidifying.
It does. By early October, things got quite creative. We saw netizens using coded language, emojis, setting up online petitions.
All trying to get around the moderation.
Exactly. Trying to keep the conversation alive despite the controls. And it moved beyond just asking questions about Yu Menglong.
How so?
People started their own kind of online investigations. They began linking the case, often without proof, mind you, to other figures, persons of interest, even relatives of officials.
So it wasn't just about the actor anymore. It was about power, accountability.
Precisely. And two core demands emerged very clearly from the public chatter.
Which were?
Release the surveillance footage and clarify the timeline step by step. It showed this wasn't just about mourning a celebrity. It had become a struggle over who gets to define truth in China's digital space.
Okay, so we've mapped out these fault lines, the public pushback, the use of coded language. But let's connect this to the bigger picture. How does this online skepticism, this demand for transparency, actually impact things like, say, economic value or investor confidence?
That's the crucial link the Yu Menglong case really throws into sharp relief. That gap you see opening up between the official version of events and what the public perceives or believes it has a real cost.
Price tag you said earlier.
Absolutely. Public skepticism, especially when it feels like a form of participation, erodes trust. And that erosion isn't just a social problem. It has tangible economic fallout.
Because confidence is key, right? Whether you're a consumer or an investor, you rely on information being perceived as reliable. You trust the institutions providing it.
Correct. And when that credibility takes a hit, what happens? Reputational risk spikes, and perception starts to actively drive value or devalue assets. This is where we see this idea of information credibility risk becoming a major factor.
Is that genuinely different from, say, standard political risk? Investors are used to assessing political stability?
I think it is different in its nature and speed. Political risk often feels like it plays out over longer cycles based on policy shifts decided, behind closed doors.
More predictable, maybe.
Sometimes. But information credibility risk, it's instant. It's driven by real-time public sentiment online. It's almost democratic in a chaotic way. And it creates this intense volatility that older risk models just aren't built for.
So the thinking is, if the official story about a high-profile, supposedly simple accident isn't trusted.
Then what does that suggest about the trustworthiness of, say, corporate financial disclosures? Or regulatory statements across the board, not just in entertainment?
It becomes a fundamental due diligence challenge for investors. They have to assess not just policy, but the reliability of the entire public information system.
That's exactly it. For global funds looking at Chinese markets, this case means they now have to ask, how resilient is the official narrative structure when shocks happen? Can information be verified independently? Or does it all rely on official assurances that the public demonstrably doubts?
That adds a whole new layer of complexity to risk assessment.
Definitely. And think about brands, too. Multinational companies. This is a huge warning sign for them about just how volatile public opinion can be.
Because a controversy can escalate so quickly online.
Almost overnight. It can turn into calls for boycotts. We saw that here, calls to boycott films or brands, even loosely associated with people merely suspected or rumored to be involved without any proof.
So a brand's association becomes a liability if that associate gets caught in this credibility vacuum.
Your reputation gets dragged down instantly. Market share can just vanish. It shows that public perception is like a tinderbox now. Partnering with the wrong figure or being in a sector that suffers a credibility crisis has immediate bottom-line consequences.
It's a direct feedback loop. Public demands transparency, demands are suppressed or delayed. Public frustration gets channeled into economic action against related businesses.
Which brings us to the third group affected, media and data firms. For them, this opacity, this gap between official and perceived truth isn't just a news story. It's a financial variable they have to track.
How so?
Because market psychology, valuation models, They increasingly have to account for this public perception of credibility. If there's a major gap where you can't verify the official line, that uncertainty affects how assets are valued.
So the lack of trust itself becomes priced into the market.
It absolutely does. If that lack of transparency creates volatility or makes it hard for investors to assess the real integrity of institutions, then the perceived value of operating in that market goes down. Trust isn't the stable bedrock anymore. It becomes a fluctuating variable, reacting instantly to these information shocks.
The risk premium increases because uncertainty is costly.
Precisely. Which circles back to our main point. Yu Menglong's tragic death, sadly, became an X-ray into the system. It showed how public trust acts as an economic multiplier.
Or perhaps more often an economic divisor when it breaks down.
Right. Information control might contain the specifics of a story, keep it within certain bounds, but it seems it can't fully control perception, especially when trust is low.
So connecting this all together, the big insight here.
It's that transparency in the digital age isn't just about ethics or good governance anymore. It's fundamentally monetary. In this global marketplace where information flows so fast, perception literally shapes value. The cost of a damaged narrative of lost credibility is now clearly visible on the balance sheet.
That's a really profound shift for how we need to think about digital governance moving forward. Which leaves us with a pretty challenging question, doesn't it?
It does.
If trying to suppress information just makes people more curious, fuels skepticism, and even causes measurable economic instability, then what can institutions do? What new approaches or tools are needed to build trust proactively instead of just reacting once the credibility crisis is already underway?
That's the multi-billion-dollar question, isn't it? Something for all of us and for you listening to think about as we wrap up this deep dive.